Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on PEW. Wall Street Bets is where you get the kind of deep due diligence that we strive for, and they have never let us down before.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey, what's up, Johnny? Welcome to the Laughing Stock, everybody. How's everyone doing?
Yeah, doing good, thank you. And pew, right?
Yeah, let's get that chart up.
I saw there was a lot of that looks a bit ugly. Don't you agree?
Yeah, we were talking about this last week, and this is like the risk that we said is on the table for something like this. Is, you know, just because it's an acquisition. Now, don't get me wrong. If you sold out somewhere in here, good props to you. But anybody holding here is going to be a permanent bag holder.
Yeah. You know, we talked a little bit. Was it CLBR or something? The acquisition ticker on the last stream. Mm-hmm. We saw some conversation about this on Reddit and stock tweets, and I saw the day before the merger because I was keeping an eye on it because, you know, these things may work out pretty well. We have seen that also happen 100 times before, you know. Mm-hmm. So it's worth keeping an eye on. But what I discovered like a few days before, there was some reference going around on social media about some post that a guy, I don't know him, but apparently he has been very successful and is well known on Wall Street Bets and all that. But he all of a sudden he had sold out before the merger in this ticker. And then you start to wonder a bit, right? Because he had also been talking you know, about the stock before. And I'm not saying that he tried to manipulate anything or anything like that, but I saw a lot of people were saying that. I have no idea, but that was a bit of a red flag if you just follow the Wall Street Bet discussions and the story about that, you know, that someone who a lot of people in the forums had been leaning a little bit on, all of a sudden before the merger happened, he was out of the position, you know.
Yeah, well, I mean, like most of these, besides maybe like GameStop is like the only example. If like everyone's starting to talk about it, you're probably too late. Like you are already getting up in at the top somewhere. And I know some of these things run, and it's all about your timing anyways, but if you try and take that element of like guesswork out of it, you're going to be a lot more successful. You know, I told you on the last one, I saw this chart and I saw nothing in terms of, it was so volatile. There's no good breakouts in this to me. I mean, maybe this first one here, if you could get in way down here, which typically this wouldn't pop up on my radar by then. Because after that, it's just a mess, and
Yeah, it's almost impossible for what we are doing now to get into something like this without getting stopped out the same day.
Right. So,
So
I'm not even looking at something like this. This is way too nuts to me.
yeah,
And I also
but it had.
I was just gonna say, like, what's his name? Trump's son was like involved, and like, I don't know.
Yeah.
There's just so much like hype and I don't know, just nonsense in my opinion.
Yeah, it is nonsense, but at the same time, it was a story. Like that was the story on social media. If that is your strategy and that's the research you're doing, you would probably be interested in this ticker, But I totally agree. This is fluff for me. But it had some, some things that I can understand that people thought were bullish about this, but. Yeah, it's a little bit sad, I think, to see. I think this happened the same day as they changed the ticker, and all of a sudden in the pre-market you're down already 20% or whatever it was, So it's never fun that, but it just shows you. Like I think in the intro we are joking about Wall Street bets and stuff like that. If you want to be and just check our videos. I'm proof also that I feel like I did a lot of research on the ticker and still was participating in something like this ugly fall. It was a completely different story leading up to everything and stuff like that. But it can still happen. But I think you should do a little bit more research than just read on Reddit, at least.
Yeah, and this is why I've stopped, trying to like. You get like obsessed with like certain stocks just because you like the story, and it seems like everything's going your way, and I'm probably a little bit that way with USEG right now, but I like that story still. But with USEG too, also I'm at the point now where like I know I have a stop loss, and that stop loss will break my story no matter what. So
Yeah.
it doesn't matter how right or wrong I think I am. If it breaks my rules, I'm out, and I set it. On purpose, so I can't stop myself from, not getting out. I can't, second guess myself. It just happens. So
Yeah.
it's one of those things that like you learn on how you manage that best. And if you're someone who has trouble with it, you have to set stop losses, because if you think emotionally, you're going to control yourself like at those times when things are way down or things are way up. Good luck, because it's super hard to make the decisions in any kind of clarity, and afterwards you look back and you always are like, I'm an idiot, what the hell am I thinking, yeah. And it's so much easier if you just have rules in place and you have to follow them.
Yeah, and that's kind of the point. Like just listen to yourself. If you are confident that you have done work on this and you believe in something because of the work you have done yourself, just listen to yourself, not to everyone else, because there's a lot of people there with interest in what they are doing by themselves, so you're on your own out there.
Right. And this is another ticker that we were looking at earlier in the week, and I got stopped out of this one, and I can't remember if it was it. I'm thinking it was on Wednesday I tried taking this. It must have been. And
I think it was which day was the fall day there?
Thursday.
Yeah, I think Wednesday.
I'm pretty sure I tried getting in this on Wednesday. I thought this was, trust me, this is not a strong setup by any means, but there was something there, I thought. And, then look at it within 2 days, it's dropped below $1. So if you don't have something in place like this, especially with swing trading, I mean, it's one thing if I'm doing deep value and I know a lot about the company and I kind of have like time frames of things, so I kind of know what to expect at certain times. But when you're swing trading, I know sometimes I don't even know anything about this company besides maybe it's like market cap, its share count, and its price, and its chart. That's literally all I know about the company. And the only reason why, trust me, I'd love to do more due diligence before I go into a swing trade, but sometimes I feel like you have seconds to make a decision if you're going to hop in something when it looks right. And I'll show you an example of why that matters. But, you get into something like this and the next day it even opened up and then, just plummeted. It was down, almost 50%. The next day down 36%. So I'm not looking to take that kind of hit. you know, if I don't have to. So having that stop loss is, and we were just talking about, he was saying that, or Johnny was saying that TraderLine had a conference and had a bunch of people there and talk about stop losses and how to manage that. And there's so many ways to do it, and whatever way makes sense to you. Honestly, it's something I've had to play around with a ton, and I feel like I'm kind of at a good spot right now with how I have it set up. Can I tweak it? Yes, but I don't. The last like 2 or 3 weeks have been going really well, so I feel like I don't want to play with it too much. And this is kind of what I did originally, which was working well. So I think where I'm at right now is okay. I'm just going to kind of keep it right here, and I don't want to play with things too much because the past 2 weeks have been great. So
Yeah.
And before that, when I was playing around with it, was one of my worst weeks. So
Yeah, exactly. But also, maybe that's how you have to do it. You know, you played around and you understand, like, okay, I'm not gonna. You have made some changes, though. You have loosened up your stop loss a little bit, right?
yeah, I mean, it's not tight, but and honestly, the reason I tightened it up was just because the markets were shit. That was more at the start of the year when everything was going down from the tariffs, and I just had it tight then because I knew I probably wasn't going to get into mini names anyways, so I didn't want to just kind of throw money away.
Yeah.
But then when the markets are running like this again, you don't want to have it too tight because you're just going to get stopped out of stuff that ends up running up.
Yeah, 'cause
OSS, I had this last week. This has been a great stock, but on this day I got stopped out. I don't think I did anything wrong. I'm happy I stuck with my stop loss, but it sucks to see it run up. And the tighter that stop loss is, the more of these you're going to miss, because on that day when it pulls back, there's nothing you can do. You're just going to get stopped out. And you know, I'm sure there's computers and algorithms that are pushing these things down as much as they can to try and stop as many people out, you know, and then riding it up. So,
I think also I know breakouts have been working good like the last period, but at the same time, I see a lot of people, and I've experienced it myself, that and this is also an example of that. Like breakout is working, and then the next day you have a lot of examples where you get stopped out the next day, and then it continues. So it continues to work, but since you operate with maybe a little bit of type stop loss, it has been a bit hard to be involved in some of the breakouts. At least I see also a lot of people are struggling with the same. So, and they are good investors, much better than me, you know. So that's also been an environment now that yeah, breakouts are working, but they are a bit hard to get involved in as well. So I think maybe loosen up the stop loss has been a good strategy in this environment.
yeah, to me, the way to deal with that is to loosen it, and also to make sure you're not chasing something. Like, I'm not getting into something when it's up too much.
Yeah.
Either that. The other thing that I find you can do, and if I had more time and I was able to watch things more, I would do this a lot more. But zoom right into the intraday, and you know, when you're looking at the minute chart, when something pulls back like this during a day that it's kind of popping, this is a good time once it starts to pop back out. If it breaks out of the dip here, that's if it's still in the range that I want to get into. I'm not saying it's pulled back, you know, where it's out of a breakout. But, you know, when this dips and then pulls back up, that's a good time to get in. Because otherwise, if you're buying up here on any of the intraday charts and then it pulls back, like, that's what you're going to get stopped out. So if you didn't get into something, you know, on the initial rise up and then it's pulling back. And I know this isn't a breakout day, so it's not like a perfect chart to show you. But actually, if we go to like the 60-minute. So like in here, you know, if you're buying up here, you know, there's a chance you get stopped out because you're late to get into that. But if you wait for the dip, which is somewhere in here, and then you wait till it starts to come back up, you can get in somewhere in here on this day. And then don't get me wrong, it's still luck if you can stay in some of these things. There's just nothing you can do about that factor, which is why it's all about odds and just, you know, making sure that you're paying attention to where you're getting stopped out. But that execution in terms of timing, getting in on these things is what's so big.
Yeah. I've been watching some. It's not new, but it's new for me. Like a way to look at the 5-minute charts on pullbacks, like you were saying here. Like if you put on some of those exponential moving averages, and just track when if you put a 6-minute on, and when that crossed the 20. that's a strategy on its own on a 5-minute chart to maybe take a position then on a little bit of volume, and then you put the stop loss on the last candle, on the low of the last candle before that happens. So you can use those EMAs there to kind of try to time it a little bit as well. But if people want to look at that strategy, you can find a ton of videos on YouTube about it. But it's something to help your timing, I think, in exactly what you pointed out here.
Yeah, and I mean, you know, you have more dynamic charts than I do with TradingView because you can kind of zoom in out. Mine's, I have to switch through the different. I'm used to stock charts now, so I actually really like the setup. So I'm very happy with stock charts, but you know, most traders use something more like TradingView, or what's the other one that's super popular?
You have MarketSmith, Thinkorswim. What is it? Kulamagi used TC2000 or something.
Yeah, TC2000. That was the other one I was thinking of. Those are all excellent for what we're trying to do. It's I'm fine with being able to hop through these, you know, and just see them in different. You just had to build them in stock charts. That's the one.
Yeah,
they're easy to do. I mean, it's all very simple to set up. I know this probably looks complicated at like a quick glance, but it's not. There's really not much going on here. Anyways, and I know my charts, I got a lot of lines, but like it just means something to me. So like, you know, you don't have to have, I probably don't honestly use most of this shit. It's just in there for me because, you know, I like to see just different things to give me an idea of where everything's at. And I found now, you know, just by looking at these kind of things, like I just am starting to see it better. Last week and the week before, don't get me wrong, I didn't get into everything. And I was posting about it in Discord. My biggest miss this week was this and last week, actually. I don't think I made actually any mistakes in terms of like doing just something that broke my rules. That's like my big mistake thing, you know, like don't ever break your rules and like you won't make mistakes. I did a little bit with Drone Shield, which I'm still in, and I'm just holding it for now. And reason being is it's pulled back here. I'm still up on the position, so I really don't care. But I should have sold out on day 3 at the end of the day, and I was trying to get a few cents extra just to help pay for the stupid selling fees. I hate that there's a fee. So dumb. So dumb. Right? It's literally pennies. It didn't matter at all. And I didn't sell out because of it, because I put my limit like 3 cents higher than it triggered or whatever. And then the next day, of course, it comes down, which in my mind, I figured it would. It was such a good run up. And and now I'm holding it, you know, and don't get me wrong, like I said, even if I get stopped out at the 10-day or whatever, it's not the end of the world. It's a lesson learned. But me trying to squeeze out same thing. Like I didn't get into Next. Like Next is one of the ones that we had you know, excellent. On this day I was gonna get in at 965 was what my thing was, and I missed it by a fucking penny. And you know, and these are just inexcusable ones to miss. TOI, this is another one. Which actually did pull back, so that one's not such, but like same thing. I missed it by like a penny because I'm just. And that one actually, this one I actually went above what the actual cost was, but it just jumped on me, so I missed it. So I'm not so like angry about this one. But and you know, and don't get me wrong, this one pulled back, but like that's not the point.
Check out KOPN then, because I have the same with that one.
Which one was it?
KOPN. On the candle up there, I didn't take it because I felt it was a bit extended, and then just like it just kept going, this one, and it did pull back a lot on Thursday, but I think I would have sold. That would be a 30% gain in 2 days or something. I think I would have sold the entire position up there.
Yeah. So I mean, you know, this is you know, it's just those things that you're working on. I mean, that's something that like I noticed in the past like 2 or 3 weeks that I'm still kind of weak on. Just, you know, in my head being like, you know, and the other thing too is like we were talking about tight stop losses. So in my mind, I'm like, well, if I cut back like a penny here and it pulls back and, you know, I get in at that price, well, then if I have a 4 or 5% stop loss, you know, it's that extra, you know, a few cents lower. So my chance of getting stopped out goes even further down. Like those are ways I'm trying to rationalize that in my head. And, you know, when you're looking at stocks that have smaller price values, like in this $2 range, it's kind of risky to do it because, to be honest, there's not much of a bid-ask spread usually on these. You know, it's usually by like a penny. If I'm in a stock that's worth, let's say, $30 and the bid-ask spread is like 50 cents, that's a good one to maybe put it on the low side because there's a good chance you'll still trigger, and then you can take advantage of that. But in these ones, you know, if something's moving up and you're not getting in, most of the great stocks, when you go to buy it, they're flying up already. Like everyone sees there's a bunch of us doing this. There's a bunch of us who look for breakouts. And when it occurs, we all try and hop in at the same time because we know there's no one selling. There's not enough sellers. And that's the whole point, is we're trying to catch this at that inflection point of where there's not enough people selling and the price just flies through the roof. And, you know, if you're trying to be nitpicky on these things, which, you know, you're going to miss it.
Yeah. Hey, Dane, Value is in the chat here. Maybe he posted this a while back. I haven't seen it, but he's saying pew pew. Sup, guys? So hey, Value, how was your holiday? I think you went on a holiday this week, right? Yeah, I hope you had a good time. Did you photograph any stars? We need more star pictures. Yeah, I think.
Yeah, that's right. This guy's a good photographer.
That was very cool.
But yeah, so I mean, you know, just I feel at this point, like I feel like I can see it. You know, I guess it does become kind of a nuanced thing because in the morning now, and don't get me wrong, I actually really like my screeners. Now that I switched over to stock charts with my screeners and I got it built the way I want it, it doesn't offer me a ton of things to look at each day. So it kind of narrows down my focus. And then I've been working on during the day. You know, let's say my screener pops up 5 charts. You know, let's say 3 out of those 5 charts looks good. Okay, well, of those 3 stocks, which one looks best? You know, and what do you look at? You know, how do you determine which one's most likely to pop? Like I was pretty happy yesterday. I picked ATAI, and I only had enough cash to take 1 position yesterday, or yeah, it was yesterday. And when this one started to pop, I had like 5 or 6 choices in what I wanted to get. And this one to me still looked like the best pick, and it ended up being the winner for the day. So it's starting to make me think that, like, okay, I'm getting a little bit better at selecting these, even when it comes down to, you know, I have 3 or 4 charts that look good. How do you pick the best one of those? And I'm not saying this will probably pull back 15% on Monday, so don't worry. It's not like it's going to work out always. But my point being is that, you know, it's nice to see some of these choices, you know, actually kind of work out in your favor.
Yeah, and at the same time, like, even if this does pull back on Monday, it's just nice to know that you are on the right path on things. And at that stage, it will just be the execution that counts, right? Yeah. And how you deal with the risk management and all that stuff. So then you can at least deal with the good setups that you have noticed them already. So that's a huge step forward when you try to learn this swing trading, you know, world. Value is saying great break, no trading, but the trading account went well. I should have holiday more often. He didn't take any photos, but plenty of food and family time. That sounds good, Value. Yeah, sounds awesome, really good.
Yeah, sometimes you know, I was actually thinking about it. You know, even the weekend comes, and it's really nice just to take a break from the markets and not feel like there's every day, like while I'm doing work, I have this like going on in the back of my head. I feel like at all times, and it's just like it's a lot. It is. Know, I wish I could do this full time, and as of now, you know, it's not. I'm not there yet, but there's a lot going on here, and this is why I like swing trading, because I can do it, and then after like a little bit of watching some things, I can kind of let things ride for the rest of the day. If you were day trading and you had to really watch it all day, I couldn't do it.
I couldn't do that. I don't want to do that. I would be interested to learn some aspects of it, because I'm sure you can take a lot of parts into swing trading. But that would be too stressful for me. I would never have the time for it. And yeah, swing trading sounds way more attractive to me. And there are a lot of day traders who turn into swing traders, I think.
Yeah, I mean, I get it. You know, I wish I could day trade, honestly, just because I think I could blow the account up a little bit faster just initially.
Yeah.
And then I think day trading really starts to get hard as you get a significant amount of cash. I think it becomes very difficult because you're talking that you're trying to get small increments on things. And, you know, when you're day trading, you're focused on maybe 1 or 2 stocks and that's it all day. You know what I mean? Like, it's not like,
Yeah.
you know, just breakouts are a little slower. I don't know. It's just not as like crazy in terms of timing as. And day traders have like, you know, hot keys to buy and sell, you know, quickly.
Yeah.
I don't have that set up.
No. I would mess up so much if I had those hotkeys. I would press the wrong ones all the time.
Yeah, you realize you bought like again when you're trying to sell. Yeah. That would be brutal. That would be brutal if you bought like a, you know, a couple hundred shares when you meant to sell.
Yeah.
Yeah, and actually, I feel like what's his name? Trader Warrior.
Yeah.
I know that guy's got some controversy because, you know, he's gotten some lawsuits against him. But either way, I know he said like on his worst days, it's always because he made like an actual error, like he clicked the wrong button or like didn't pay attention to something and like, you know, ends up down, you know, $50,000 or something because he just, you know, messed something up, clicked the wrong thing.
Yeah.
I think he said the one day he had 2 or 3 things going and he went to sell the one and didn't realize he was on the other stock and sold the wrong stock at the wrong time and didn't sell the one that was dropping.
Yeah.
Like, you know,
I can very well see that happen often because things can be very, you know, chaotic in your head at the time where you start to have to execute on multiple plans at the same time, you know.
Yeah, that's why I'm saying I give people credit who do it because I'm not trying to take on that level of stress. Like I said, if I was home all day doing it, maybe I could pull it off. But like, I also don't want to spend all day staring at it.
Yeah, no, I agree.
Like, it's just too much. I enjoy deep value more than in terms of just looking at charts and stuff. I can read up on companies and do that side of it for a while. I like that. But just staring at a chart bouncing up and down all day is, you know, it's going to dig my eyes out.
Yeah. I agree with that.
Just because I haven't really pulled up the dash too much. Obviously, the other big thing that's happening is stablecoin law got passed in the U.S. So it's a big victory for certain types of cryptocurrency. It's probably a bullish sign for the overall markets in general, just in terms of their acceptance. And possibly, I think the big thing is, will this lead towards them being accepted as currencies? And can we start to get some Bitcoins, and not just Bitcoins, but can we start to get some cryptocurrencies that the price isn't so volatile? You know, I know they're, you know, XRP, is that the one that's pegged to the dollar?
Yeah, I think that's XRP.
Yeah. So, you know, those are the kind of ones that I think show decent promise from this. Like that, those are the ones that benefit the most. I think I saw XRP bounced and then was back down though at the very end there. But
yeah, I think a lot of them did because coin was also going up and then it came back at the end of the day there.
True. I'm just looking at this is a 60-day or 60. What the heck am I on? Oh, it's just weird how it shows it.
Yeah.
Oh, because it runs 7 days. I was like, why does this chart look like this? But crypto runs nonstop. That's why. That's how unused to looking at crypto.
Yeah, exactly.
Because it never stops. It just keeps going.
Yeah.
That's another thing with crypto. Like, once again, you don't get weekends or any time off. Just all 24 hours, you know.
And did you see, I sent you that news, right? The BTOG ticker, they raised 500 million for, what was it? Someone to create a Dogecoin treasury.
Yeah, that's not it. Yeah.
That's a lot of money for something like that. But
yeah, and
okay.
There's so many of these things now. I mean, it's a little mind-boggling. I mean, at one point, NFTs were a thing, which I still think is hysterical.
Yeah, but that one was like, that was so clear that that would never work.
It's just, you know, don't get me wrong. I don't think digital stuff isn't art. It's definitely art. But to be able to sell something that, you know, can be so easily copied is insane in my mind.
Yeah, and sell it for a lot of, all of a sudden, a lot of people had a lot of value in digital art, you know, and so that it was worth a lot of money too.
And you know, I mean, if there's a market for it and people are going to pay for it, it's no different than regular art. But I just didn't.
Yeah.
I never saw that panning out very well.
Yeah, no, I
It's just
agree.
a
And
bit
then
of a
you had
wild thought to me.
you had all the celebrities just jumping on it, promoting the shit out of their NFTs and all that. It was pretty clear that this was a, you know, big. It would disappear.
Yes. So, it looks like mining's still doing well. A lot of those names are still up, not NAC, but
Yeah, not Mac.
Tesla's showing a little bit of a bounce.
Yeah, and establishing itself over a 50-day moving average here. So, you know.
I have to update all my stuff. I got in my spreadsheet still pulling up my old stock chart.
Okay.
But yeah, I mean, you know, all the moving day averages are consolidating pretty well right now. So
Yeah.
we'll see. Still kind of
And
wild.
I think like, yeah, you know, this has been a bull market since it started in April, right? And Tesla has been pretty weak in that same period. Has fallen behind a little bit, but you know, this thing can it lives its own life. So maybe you will get a bounce. They have earnings though coming in soon. So I don't know, but maybe you will see Tesla get some momentum before you know we go into a more correction of the market or something like that.
Yeah, I think the next time I'll be really bullish on Tesla is when I know Elon's kind of stepped back and he's kind of focusing back on some of his companies and whatnot again. But I mean, Tesla for like a while was just coming out with new things time after time after time. I think whatever their next real big model is, that's, you know, really, you know, appeals to just the masses. Like they've had the M or the 3 or whatever it is. Is that what the base like model is? Like that's the one I feel like that sold super well. So whenever they come out with their next like one that's at a fair price for like the average person and you know, is an upgrade on the previous versions, you know, better battery, longer travel. Once that hits like a certain threshold, I think those are going to continue to sell really well. And
Yeah.
you know, I think that's the next big time that something will really give bullish news towards Tesla and push it up higher. I mean, don't get me wrong,
Yeah.
this still has $1 trillion valuation. So, you know, you can say whatever you want about, you know, how it's performed. It's still pretty impressive. But
Yeah, and it does still, even if it's a big, large company, you know, it does have these massive moves. So Tesla is a bit interesting, I think. Here, I took a position on it this week.
yeah, and I mean, I can see it, not really my kind of thing. And I know you've talked about how you've also kind of adapted a little bit, you know, into bigger companies and, you know, kind of taken that strategy.
Yeah, I've been wanting to just check it and see for a period of time if I can get involved a bit deeper in a base, and then looking at a little bit larger companies. But I'm still looking at the ADR and stuff, and according to my ADR, Tesla still has around, you know, a little bit less than 4, but that's within my range. So I'm okay to take a position there right now, but I'm just testing things, and so far I told you before the stream, like I've been allowed already to move my stop up a fair bit on this, you know. So far it's been working good, but I see here in trading it says next earnings report is in 4 days, so I have to see what I do before the earnings.
Gotcha. Yeah, I feel like just a mix of different things are allowing me to pick between the different ones. And you know, the only thing that holds me back is, and Tesla's probably one of the few examples that break kind of my rule. And I see what you're saying is like when you're looking at these really big companies. Now, to me, I see, you know, anything that's over a few $1 billion in terms of market cap, they just don't tend to break out very often, and they don't break out super strong. Now, maybe for an institution that's going to hold something for a few months, you know, probably quarterly is usually how institutions are looking at things. I can see the value in taking something in some of these larger companies and then, you know, kind of following the news and all that. But that's not really my game. You know, I find if I'm going to buy bigger companies, I'm going to look at value. And you're using the base, you know, to get in on some of these things, which makes sense to me if you're going to try and capture an actual return on some of these. Because, you know, this is, you know, Tesla's a good example. I mean, it did break out on this day here, for instance, like if we're looking at this kind of range here. And sure, you could have probably got in on this day and then, you know, you would have rode this up. But also, too, like, you know, if you weren't super confident on this day, you might have missed it and then it gaps up so you can miss it here. So if you're focused on a base, it might be a little easier to get in. But bases are tough. I have a hard time with bases. I'm not...
Yeah.
You know, I'd want something to be way pulled back if I was going to be looking at bases. But my point being of all this is that, you know, I'm focused on, you know, something with lower price tags, lower market caps. Those are the ones that I've been able to more successfully trade. But if you're going to look at the big companies, I would stick to the top ones, the magnificents, you know, Tesla, Amazon, you know, Apple, Meta. Those are the ones where they, you know, they're going to push to pretty high amounts just because there's such large institutional buying.
Yeah.
I just didn't pull up the market strength for the last, just opening this up a little bit. I don't, can you see that? Oh, it's not too small. Let's do 110. Hopefully that's a little bit better.
Yeah, that should be good.
But I mean, things are still riding high. I had a little bit of a slowdown. It looks like, you know, yesterday, there's some breakouts that failed. Just less stuff that came up, but still, I mean, I still have 172 stocks of my amount that's at a 52-week high, which we did get up almost to 300 at one point at the start of the month. So, you know, really strong at that point. But I still have the monthly, the 3-month. This is one I've been following quite a bit to just kind of track how strong everything's been moving still. You know, as this number starts to pull back, it starts to show me quickly we're not at that super strong part of the market. Obviously, you can use the 1 month too, but the 1 month actually shows strength. I mean, it's, you know, it's up into the 70s now. So there's a lot of stuff right now. The only reason I don't use the 1 month too much is just because it doesn't give you enough feedback, like almost looking forward in my mind. Because, you know, if stuff, we could be at a peak right now and I wouldn't know it, because if I'm just looking at this, you know, you're going to miss it in terms of as it starts to happen, you'll be watching it and it's too late at that point. But really what I'm using this for is my market rating now is averaged at 8.5 on this, which is just an average of whatever this is, which if you want to figure out what this calculation does, go for it. I don't even remember at this point. But it's averaging all this stuff to just kind of give me an idea of how strong things look in terms of breakouts and stocks that are at all-time highs. I wanted to get this going for a while, and now I start to see that, you know, around 8-ish is pretty average in terms of having, you know, this really poor time in the market and now a much better time in the market. And I've noticed that breakouts are pretty strong once we're above 8. You know, 9, 10, definitely. So in terms of me continuing to purchase swing trades and just focus heavily on that, I'm going to keep going, because as of now, it's just been, you know, since the start of the month, we've been over that mark where just breakouts are working left and right. Every day I see them. Every day things are working. I'm not saying it's easy to get into these things, and you will, but for instance, we were talking about USEG. USEG had pulled back, and we had talked about getting into USEG when it got into the 20s. And I actually didn't take a position yet, just because all my cash is pretty much in swing trades. And you know, I mean, maybe I'll kick myself at one point, because I end up missing this bottom here where you can get in and actually you know catch this for the actual deep value play here. But you know, if I'm making a couple % a week and doing swing trades, that's a really fast return that it's kind of hard to justify taking a lot of longer term positions. I'd rather wait till the breakouts start to fail, and then I'll start to seriously consider getting back into like something like USEG.
Yeah.
Or any other
USEG,
deep value positions you see.
it did bounce up again from 122. So again, it's kind of resting at that, 120 level.
Yeah, and this is the 60-minute chart, and like, it's still just trickling down. So this to me just shows that like you still are going to have some opportunity to get in here.
Yeah.
But
value agrees. He says USEG looks a good value play again. Yeah.
Yeah.
It does do that.
So, I mean, and we've talked about this for a while. This is one of those ones that can get down to this mark, and then any kind of good news comes out, whether it's bullish on energy or bullish on, as the helium play starts to work out, you can watch this go back to the $3 range. So it's a quick play when it spikes, but you got to be ready for it. So.
Yeah, and not to mention then that it seems like the CEO is setting it up for a sale. The entire company.
He's always said acquisitions in the back of his mind. So
yeah,
something to just have in there. But yeah, so as of now, like I said, because of the strength of the market, I'm just continuing to do breakouts. And once again, I'm actually at all-time highs for my account. So this was this week, which I had 5% this week. So super strong week for me. If I could do 5% a week, whew, I'd be in good shape quick. Which actually brings the month up, because I had that one terrible week, which is so disappointing that first week in July I got smoked because it was so many things were working out well, and I was just whatever. It's made me work on all my execution, which, like I said, has improved drastically over the past 2 weeks. So hopefully we can keep it going. But that puts me at 30% for the year.
That's very good, and I think you will reach 50 within this year. I think so. Yeah,
I hope.
But it is dependent on how the market continues, of course. But I think a good scenario now for us, for swing traders, would be if it slows down a bit, maybe we get a correction now, and then if it finish strong again, at the end through the end of the year, kind of like because you started in September, October 24, right, and experienced a very good period in especially those quantum names and some China stocks back then. So maybe if we get a period in that area as well this year, where we can get a lot of new setups.
Yeah, so
that would be very good. And I have to take a little bit of credit then, because the glasses were on the entire stream last time, right?
And I don't know why you don't have them on today, because I need those glasses. I'm telling you, those things those are diamonds.
Yeah.
Those glasses work, dude. I'll slow down next week because you didn't wear them. So I'm already anticipating next week will not be as good. There's no way.
Yeah.
But yeah, and like I said, I've been doing the 10-day moving average for all my stuff. So like, I mean, this is all updated. So these are actual positions and position sizes. But if you go, where is well, actually I can just do it here, but if we just go to some of these names, I've talked about AMPX. This has just been a monster. It's just every few days it's up. Look at this volume. I mean, it's still having higher volume data. I don't know how this is possible. I don't know who these people are buying. Keep buying. You guys are doing great.
And AMPX would be like, it's hard to get in now, right? But this would be I've had this on the watch list for a long time, but I'm not less interested to track this now, because if this consolidates and find a base here for who knows how long, and you see no selling in that time period, this is exactly we have talked about AIVA and CESL and those things. This starts to look like one of those.
Yes. So once again, I'm rocking that 10-day moving average, so you can keep going. We talked about ATAI. And then don't get me wrong, some of the other stuff's pulled back. I talked about Drone Shield for a second, so I won't go into that one. You know, Griffles is pulled back, but once again, you know, I got in somewhere in here. So, you know, I sold, you know, a third of my position on one of these days here, or half my position actually. And even if this one pulls back into here, it's still gonna be a profit overall, even though it, you know, it's pulled back from $10. And don't get me wrong, you know, should I have sold on super strength here? Yes, but how do you determine which ones of these are at their all-time highs and which ones are gonna run up? So I find that's why the 10-day moving average is nice. I did switch to exponential. I just want to point that out. It's an EMA, not SMA for my 10s.
And on all of them, right?
Yes, yeah, everything's a 10 EMA that I'm using now. You know, ISSC is another one that's continuing to ride up. And, you know, I'm looking at these tickers and like, you know, don't get me wrong, this is a super hard gap to catch. You're not catching that. Maybe you got lucky and you got in right here, because that's really where this base kicks off, and this is a sick one to get. And then you wouldn't even have got stopped out on the second half of your position until at, you know, almost 14 bucks. So that means you're buying, and, you know, most of your position's already at double. And I know it took a month to get there, but I mean, it's still a double for half your position in a month. I mean, so
if you look at that particular stock, because this is something you can do as well, right? If you look at some big moves in the past, it does follow the same pattern. It follows that 5 and 10-day moving average, and when it does break it tends to fall a bit. So you can see in the history of the stocks, like Pilamagi, I don't even remember if it's him, but they talk about how stocks can have their own personalities, right? And this is kind of what they are meaning with that.
Yeah, and actually I was listening to someone talk about fractals this week on a podcast, and like it's almost the same thing. Like you see it popped here and rode up, it nicked that 10-day moving average, and then once again breaks out here. And now this one almost looks like just a bigger version of the same thing. It nicked it right there, and it's you know, now it's breaking out again. So that means on Monday I'm going to get 100% return here when it gaps up.
But you know, David Ryan talks about fractals in charts as well. So it is something like patterns that repeat itself in different scales, but you find them again and again, right?
Yeah. So I just need this to hit $100 on Monday, and that'll probably get me close to 50%.
Yeah.
You know, Joy's another one. I got in here, and I'm hoping this can push a little stronger, because it had this nice 10-day run up as well. I mean, look at this is one. If you had somehow gotten in on either this break, well, I guess it would have been here. It's a tough breakout. It's not a great chart. But look at this ride you could have had. I mean, you know, you'd still be in it, and you got in at like 44 bucks. And I know it doesn't have the highest ADR. You know, it's a bigger market cap. But my point being is the chart holds up.
Yeah.
But you can see it with all these. You know, the robotics one here. That's another one. And you know, it doesn't sound like much, but every day that I'm getting like a 1% return on a bunch of these names, that just keeps adding up in the background, and it gives you like this confidence of just like watching these things roll. And you know, it's nice to have that. You know, let's say I go into two names during the day and I get stopped out of both, and the rest of my portfolio, each one of these is up 1% or 2%. It kind of balances out, so the whole day's like I didn't really lose anything, and I got a chance to get into 2 new names. So it's kind of this like backwards rolling momentum of the ones that are looking for a 10-day moving average, which kind of keeps affording me to be able to keep looking at new stocks to actually take the breakouts. So it's this nice rolling pattern that kind of keeps you going.
How many days though would you accept like a slower move up before you say, "Nah, I'm out of this"?
I haven't actually thought of it like that. I've just stuck to 10-day moving average. So I mean, like I said, you know, if I'm making money on something, you know, there's a good chance I could have that money go into a new name and it takes off, but there's a good chance I could put that money into another name and it would get stopped out. So you just have to, I'm trying not to think of it like that. I'm just trying to think of like, hey, look at these charts. Once again, if you had gotten in this name on this breakout here, you wouldn't have gotten stopped out until way up here at 20 bucks. So every time I see this chart, this is just that reminder in my head. Don't, like, you know, take your gains after a few days here just to kind of lock in the position and allow that stop loss to move up. and then let it ride, because you never know how far some of these goes. I know, don't get me wrong, some of them break down quick, but the more you start to recognize these patterns, you know, and don't get me wrong, sure, someone can be like, oh, well, this sucks, you got out at 22 and it was just at 26. Yeah, but I'm already up 100% on position.
Yeah.
You know, and like if you keep doing that, you know, it will start to work out. You know, it is working out. I can tell you that right now. I was up 4% last week. I'm up 5% this week. So, and you can see all these names I'm getting into have this run. I mean, these are strong names. I'm not doing anything. You know, I keep saying the same thing over and over. I feel like I don't even know what to come on the stream and say anymore, because I feel like I'm just repeating myself. But you know, this is other examples of where if you can get in on any of these breakouts and then you can ride it for a while, you can take advantage of these things. PRM, I mean, I if you haven't seen all these charts are the same. PVLA, this one was exciting because it popped right up and then pulled back on Friday. So I'm hoping this one holds up. I'm not sure.
Yeah.
Could get stopped on this one. SGHC, this is kind of the slower mover one you've been talking about, Johnny, but at the same time too, like it's moving sideways, and if it can hold above that 10-day, I'm hoping it pops again. I don't know if I might get sold out of this one soon. But
yeah, but at the same time, this if you look back since Friday, 24th of January, it has a lot of volume since then, you know, buying volume.
Yeah.
So if this even consolidates, I think it looks even good. If you can move sideways for a little bit here, you might get another setup in this one.
Yeah, and I'm 90% sure I got in here. So I've been in this one for a while. So even though it's been kind of running sideways, the second half of my position's still up decently. So it's you know, it's not a bad thing.
No.
You know, there's a few names I noticed on Friday that had some pullbacks, but this is why I'm saying too, I like the 10-day, because I'm not getting just knocked out on every day there's a pullback.
Yeah.
You know, and you know, I used to look at the portfolio and you see you're up, let's say 15% on a position, and it has like a 4 or 5% pullback, and you're like, oh, now now it's only 10%. But, you know, instead of looking at like that, just you have the rule in place. It doesn't allow you to emotionally think about, should I get out right now? Should I not? It's just follow the 10-day. If it breaks it, you get out. If it doesn't, you just ride it. And there's so many times it has that 5% pullback, and then within 2 or 3 days, it's up again another 3% from that 5. So
yeah, that happens a lot.
Wisdom Tree was another one that I hope it keeps pushing higher. Zebra's another one that's looking like I might get stopped out here.
Yeah, I saw that chart.
But I mean, this is up. I don't even know. I think I'm still up like 20% or something on the second half of this position. So all good.
If you took it on
I either took it here or on this day, one of these two.
Yeah.
But yeah, I mean, so, you know, I don't know. I mean, I'm trying to be, like I said, I'm trying to be transparent with what I'm doing. I hope this is helpful to people. If you're looking at, I'm sorry if someone's doing deep value right now, because like this is not a time in my mind to be looking at deep value when breakouts are working.
No, deep value was January, February. That you saw a lot of opportunities there.
Yeah, there was. You know, even
if you pull up the S&P, then
this won't pull it up. That's a pain.
Or just any of them, like that.
What the hell is the ticker?
Can't find it.
It's just SPY. All right.
Yeah, because you know, these V-shapes forms in the general market is not like it kind of reminds a little. It's not the same, but it reminds a little bit of the pandemic 2020, right? In how quickly it recovered. And maybe you could say like you kind of expected this because of the news and all that stuff, that things were always going to be a little bit. I think there was a big chance of the market dropping in the first place when he started with the tariffs and all that stuff, which you knew he would do because he went to election on those promises, you know.
Mm-hmm.
And then as you felt like the market reacting to the new news and everything, it just didn't care as much anymore. So I think you don't often get these quick bounces back in the general market, right? So this all happened very quick, because usually you can deal in deep value for more than 2-3 months, you know.
Yeah.
But right now we are back at the all-time high, so maybe you should well, I guess you won't find as many cases that you did in those periods.
Yeah, and I mean, even if you look at the S&P here too, you know, a lot of the names I talked about that have been having this kind of bounce and run up above the 10-day moving average, a lot of this stuff comes from passive indexing. So, and I know this is the S&P 500, so it's not a lot of the names I'm in, but like same idea. If you're looking at, you know, like the NASDAQ composite or something like that, you know, these names run up, and you know, all this little extra buying that's coming in here to the actual indexes is getting put into small amounts into these, you know, stocks that I'm in. So, you know, when this stops and starts to hit 10-day moving averages, I'll probably get stopped out of most of my positions. But it's basically like I'm capturing what the index is doing, but just at a bigger scale, because the stuff I'm in is more volatile. So it, you know, it goes up more. So
would you ever consider taking something like ARK, like what's her name, Kathy? What's her name, Kathy?
Kathy Woods.
Yeah. Would you consider to take like a position in her ARKK ETF?
Yeah, I mean, probably not, just because of the size. But
Yeah.
it's not to say that, you know, she's not doing well. And I mean, if you look at this from like a breakout standpoint, you could have done the same thing on this. Like on this day, very clear consolidation right here. It breaks out.
Yeah, I know. And that's like a 30% gain up to there. So it would have been a very good trade, and maybe a heavier position, because you are a bit more secure that she's gonna, you know, track the market really.
Yeah, and I mean, if you look at this chart, I mean, this looks just like that S&P chart we were just looking at. So I mean,
Yeah.
she's just moving with the markets, which, you know, Kathy, from what I see, she buys like kind of the hype companies. You know, I know. Sorry, I can't see my quotes here. So it's like, you know, I see all these different things, and I'm like, you know, don't get me wrong, you can play these. What I should probably do is just start buying options on these things and just take advantage of where the breakouts are. But
Yeah.
I just don't have the nerve to do that.
Because I mean, if you look at that graph as well, it follows what you say with the 10-day moving average and all that. You know, it's the same thing, just a bit heavier.
Yeah, and you know, there's periods where this works very well, and then you can see in here there's a lot of choppiness where these don't work.
Yeah.
So
Yeah.
this strategy works very well at certain times. And you know, that's why I said you start to kind of see it when it's happening, and that's when I can take advantage of it. And that's why I said as of now, I don't see any ceiling here. I mean, you know, this just keeps riding up. So I think kind of until we get some poor earnings news and stuff, that's why I don't think this market's going to slow down until we start to get some reasons for it too. I don't think anyone believes Trump's going to hold tariffs at highs.
Yeah, I was about to say, like, the new tariff news and that he will put them on in August and all that, it didn't affect anything really.
Right.
This time. So Value was saying 100% we need the glasses.
Yeah. Thank you.
All right. We will see.
Yeah, we got to get them on at some point at least.
They just come on me. I'm not doing anything.
Sprinkle. We need to sprinkle them in here.
Yeah.
There, you know. All right. What else? Yeah. So that's all my positions. What's Insiders doing right now? Still kind of low. Not a ton of names. Which, you know, I mean, this makes sense. You know, we're at market highs. You know, probably a lot of people are realizing this isn't probably necessarily the best time to be making large purchases.
No, kind of like we said exactly now with the deep value environment, like you would see that slowing down as well, I guess.
Yeah, and you know, I mean, if you're really going to be doing deep value, you'd want to be like going into like the losers here and finding stuff that's just gotten smoked. You know, an easy screen for me when I'm doing deep value is like just see what's still got cash flow. Like, you know, it's very simple. You know, I'm just trying to see what has cash flow. You know, that has pulled back. Is that cash flow going to be consistent going forward? What's changed? You know, why has this dropped, you know, 36% NAC?
Yeah.
You know, and then that way you can kind of start to weed through these and do your due diligence without, you know, feeling like you got to flip 5,000 stones to find something. But you know, it is what it is. Sorry, I gotta update my tickers because there's a bunch of tickers that are either new or old that my thing's not catching.
Yeah.
I just haven't updated this in a minute. I used to update it every like 2 months, and it's been probably half a year since I updated my ticker list. So
It's very time consuming.
well, it's actually not that bad when I do it. It takes me maybe 5 minutes to go through the way I have it set up. It is a task, but it's not that bad. I just gotta do it. I just haven't had the need to.
Yeah.
But yeah, so other than that, I don't know what else you got. Any other names that were interesting?
Oh, I just saw like some of those nuclear stocks has been going up again. If
you
pull
talked
up
about UUU, right?
Yeah,
Man, this was another
amazing.
one that I didn't get.
Yeah, and Oklo is about to say I actually got in on Oklo and I'm up a little bit on it, but I'm a bit fearful that it will turn around here. But so far it looks pretty good to me. But
What was the ticker?
Oklo, OKLO.
Yeah, sorry, I got you. I mean, this looks pretty good.
Yeah, I know, and I took it before yesterday, you know, so I'm already in a little bit of a winning position there. So I've dealt with the stop, so I'm good on this one. But I hope it can have another breakout. I saw the entire, you know, did it pull up you? I didn't see the end.
Yeah, I just pulled it up before, and that one's just
Yeah.
flying up.
Yeah, and I I feel like I checked it and then just a few, and I was like, okay, this looks to be in a good spot, and then just a few days later, it was like, oh my god.
Yeah, no, I remember. You had mentioned it to me, and I think the day that one of these days that it was up, I'd already taken other positions. So when this one finally started to break out, I just didn't have anything to take it. And then the next time I saw it was like on a day like here, and it was already, you know, had already been up for a few days. So that kind of breaks one of my rules to get into stuff after it's starting to run.
Yeah. But
so
pull up
I didn't take it. But yeah, this is obviously a missed opportunity. This is just a great example of it working.
Yeah, it looks good. Pull up LEU as well.
Yeah, another one. I mean, this is following the same idea there.
Yeah.
Same thing with the breakouts on this. I mean, these are
CCJ, another one. That's a much larger company. I guess LEU. If you manage to get that in on that one at the breakout there, that would be maybe the good one because they have some good earnings and stuff like that as well behind them.
Yeah, one thing, you know, where you're talking about fractals and looking at charts to find personalities, like when I pull up a chart too now, I look at this and I see, look at this is ran up, it broke out of the base, ran up for a while, almost touched the 10-day moving average, broke out again and ran all the way up, and you don't even get stopped out until somewhere up here. So like to me, when I see this chart, if this company starts to break out again, I'm very attracted to this breakout because of the way it's worked in the past. Where if we looked at Oklo, for instance, which not to trash Oklo, because I've actually made great money on Oklo. The one thing I'll say with Oklo that I would be more hesitant to do is to hold. I might sell 2/3 of my position on Oklo after a few days. Reason being is this one kind of runs up, and then after a few days will break right back down to your 10-day moving average. So when I see that, it just makes me think, like, not that this one won't work. It's just that I might take more off the table at first because I don't want it to. It doesn't seem to show a lot of strength when it gets to the 10-day moving average, is what I'm saying.
Value saying LEU was one of his winners this week as well. So yeah, I saw the uranium group moved pretty consistent the entire week, I think.
Yeah, no, it looks good.
Yeah.
And I mean, it's a little higher market cap, and obviously it's a bit of a pricier stock in terms of just sheer cost per share. But it looks good. I mean, you can't argue with that.
Yeah. Airlines also had a good few days in the week, but they did pull back on Friday, a lot of them. And usually I'm not interested in the airlines. It was just like an observation. I think there was some
What is Delta's
positive
ticker?
earnings. Sorry?
What is Delta's ticker? Why am I not finding this?
It's isn't it
it's
DAL?
Yeah, it's fine. Okay. I mean, this
A
one's
lot of them had,
consolidating nicely right now. I'll say that.
yeah, and I think a lot of them had some good earnings results. UAL, DAL, but yeah, I'm not sure. I just saw the group. I've never been so interested to deal in airlines, but of course, if you find a good setup and you see the group moves, I don't see why. And it's within like your market cap filters and all that. I don't see why you shouldn't deal in airlines in swing trading.
Yeah, just most of them are a little big for me in terms of.
Yeah, they are big. Yeah.
But I mean, if you looked, this run up back in September here, I mean, somewhere in here it breaks out. If you had rode this up, I mean, this rode the 10-day moving average from somewhere in let's say 55 to 90.
Yeah.
So I mean, to your point, I mean, these things can run and they can hold,
Yeah.
but also, like I said, this is at $30 billion market cap. So back here it was at maybe 10 or 15.
Yeah.
So,
but if you look at Sky W, then Sky West, maybe that's an option. You can find some. It's still big, but it's much smaller.
Yeah, and I mean, something I look at when the stocks get up into this much, it's worth $100. Is this EPS here, which is almost $9 a share. So that may even though it's $100 a share, if I see EPS is $8-9, I mean that's pretty good. So. 10% is in my mind about where it's at. I know it's not quite that, but point being is this is a strong thing to look at, and almost a similar chart in terms of this one did nick you right there with that 10-day moving average, but then again you could have got in again pretty soon.
Yeah. So there are options within the group in if you're looking for a bit smaller market cap, but they have also earnings in 5 days. But I mean, if you look at the DAL and UAL and a lot of the other ones, they have reported positive earnings here, and the chart looks very similar to Sky W. So maybe something to just keep in mind, because airlines have had a pretty decent week as a group, as far as I have seen, at least.
Yeah, honestly, they've had a pretty good recovery since the tariff lows.
Yeah.
So,
but I agree. There's a lot of gigantic companies here that makes it a bit less attractive too. But you can find options.
Right. And Qualamaji, Minervini, Pradeep, all these guys, they say the same things. That you can look in any market, any kind of stocks, any kind of they all have these breakout patterns. You know?
And since 100 years ago,
Yeah, and like I said, all you have to think about is when a price moves like this, and then it's moving sideways in a consolidation period like this. This means that people are coming, buying and selling, and there's like a certain amount of weight on one side of this equation here, and there's going to be all of a sudden just a dry up in buyers or a dry up in sellers, and if it's the dry up in sellers, the price goes up because people are going to kind of continue to buy into these things. If someone's trying to acquire a big position in one of these companies, they're going to say every day, go purchase 10,000 shares at whatever best price you can get. And, every day they're buying 10,000 shares here. And, they're happy to buy it down here. They're happy to buy it here. And when it starts to break out, they're still buying 10,000 shares. So, your goal is, especially in retail, I mean, it's one thing if you're running a small fund and you're still using breakout strategy. Even O'Neill had a big fund and he still did it. So it's not like you can't do this at any size. But,
no, they just look at the average dollar volume more than we have to do, right?
Yeah, and they also, I mean, they have to buy bigger companies. You know, they can't, they don't want to become 5%, 10% owners on, you know, tons of small companies because, you know, who's going to go through that hassle of doing that?
Yeah.
But
Yeah.
either way.
I'm not, yeah, sorry.
No, I'm just saying, either way, you can do this with anything.
Yeah, I agree with that. And yeah, just if you just compare what they are doing, they're doing the same things, so all of them. And also, like you said earlier, Trading Lion, he had like that conference now, and there's a lot of good speakers. Pradeep is one of them. There was a woman on there. I've seen her name in one of the books I've read, so I know about her, but I didn't watch her speak. But I'm sure she was good. There was another one there that I found very interesting, and they are all dealing with the same thing, you know.
Mm-hmm.
I saw also capital markets. That's a big group, but they were moving pretty good this week. If you pull up FUTU, Dane, because I know we spoke about that last week, and I looked at it on Tuesday, 8th of July.
Yeah,
And
I mean, this is a great chart. This is another great breakout.
Yeah. But I was so stupid that on that 8th of July, I thought like, no, it needs to break up above those wicks you can find on Friday, 21st of February.
Yeah, I've learned
And then
not
the
to.
next day, of course, smashed through that level, and I was just like, oh, I'm too late now. And then it's just been painful to watch it.
Yeah, I've learned, like I said, I've learned to not be too picky on that. It just gets to that general area, and you know, I don't want it to always break out too much because you know you don't want to be the last guy in. I mean, don't get me wrong. If you were the last person in on this day and you still caught all this, great. Who cares? But
Yeah.
you know, you just have to think that not all these work out. You and I are showing hundreds of examples of this working. There's a ton of them that you're going to get stopped out on. You go in, it looks great. The next day you're stopped out. So
Yeah. What scared me a bit when I remember now is like if I remember correctly, I think it went up and it did break those wicks, but then it pulled back below them, you know. So I was like, nah, I'm gonna wait till the next day, which was a mistake, you know.
Yeah. And there's a ton of nuance because you got to think too. You're doing this intraday, so I mean, we can look back and see how clear it looks now. It does not at the time, which is the trick.
No, and it was a gap up also. If you see on 8th of July, it was a gap up from the day previous.
Yeah, right here.
So it was already up a fair amount. I think I don't remember how much, but it was up, you know, more than 1%.
So yeah, and that's why I always look for it to be up like so much. You know, I don't want it to be only up 1%, but I also don't want it up like 10%. You know, because you know then you're chasing, and your chance of an intraday move stopping you out is huge.
Yeah.
Because you know,
but it
if
looks,
we zoom in an hourly chart, I mean, you know, there's some bigger move. Like if you buy right here, there's a chance if you had your stop loss in here on like this bottom wick here, you could have got stopped out depending on how tight your stop loss is. So even though you get in on this candle, if you nail it right at the top and you get stopped off right there, and then for the rest of this, you know, 2 weeks it goes up, that sucks. It happens. But like that's the goal is to avoid that.
You just have to learn how to live with those, because I think given the most experienced ones are just saying like this happens to them too. It's just part of how it is.
It's all about just, you know, doing this often enough that like, you know, your hit rate's decent, that you're making more than you're losing. That, I mean, that's the whole base of the strategy, and that should be pretty much all investing, really.
If you pull up TIGR as well, TIGR, I think Value was saying a while back now, but he was looking at them or something. I don't remember if he owns them.
I remember him talking about. I just remember TIGR because I was involved way back here, and I caught part of this move, and I didn't. I should have held this more.
But speaking of personalities, right? Look at the 100-day moving average there. It just comes off it every time.
Yeah, it's very strong off that 100.
Yeah.
And this is why, like, you know, I don't really care about drawing lines, but like, you know, we can say that there's a bit of you know, a support and resistance line here. And this is why I said, you know, some institutions buying every time it gets down to here, and or they're, you know, they're just consistently buying, and it's when it pushes above this area here, it's where breakouts can occur. Now, don't get me wrong, this chart makes me a little less excited because you almost want to buy off the 100-day.
Yeah, but that was my point. Like, I don't want to buy this right now, but if it pulls back to the 100, and maybe wait a few days and then just put a stop loss in, and just maybe sell when you reaches the top line you have drawn on there, you know, and just do like a trade within the box.
Yeah. And then same thing too, you know, it's never broken below the 200-day moving average. So, you know, if let's say we were trying to buy in this section here and it starts to, you know, break down below this line somewhere, that's where you should either have your stop loss kind of set, or maybe set your stop loss like, you know, like right here. Just because if it breaks down that far, it's too much, you know, in my mind.
Yeah, that's going to be a bit tricky, I think.
Because it's you know, us talking about the stock's personality. Its personality is it's been doing this, you know. So when you see something like this, you know,
it changes character, and then you should have some lamps going off, like alarms going off, and probably exit is what I would have done.
Yeah, and you know, I call this section here a parabolic, you know, rise. And these ones that, you know, you just have to appreciate when a stock does this. If you stay in it, somewhere in here you got to sell at least half your position. And you know, if something rises this much, even if you sold out on the 10-day moving average, which is way back down here, if you had gotten in on any of these, you know, you're still way up on half your position.
Yeah.
You know, so you can't always worry about this huge section here and how trying to capitalize on it. Sure, sell into strength if you want. Each day this is up, you know, 50%, sell out if you want. But my point being is it starts to get hard to do it when you're in it. You know, when this is going on and it's flying up each day, you know, this stock goes from, you know, $7 to, you know, $8.50 in a day, you know, and it's probably a ridiculous amount of volume, and it's flying up and down. It's just not as easy as it sounds when it's going on.
I will also say that since that parabolic move, and you see like in your box, it's an uptrend, they have delivered positive earnings beat on 3 occasions in a row now. So it's a reason it's just sailing upwards as well, you know. And I saw a value was writing now that, he uses them as his broker, and I did have the stock, but stopped out before the run up. Okay. Yeah.
Yeah, and you know, the other thing too is you know, market cap's 1.8, PE's only 23, which I know it's a little different because this is a financial thing, but either way, my point being is you know, you don't have to be, in terms of fundamentals, you know, I peek at these numbers when I'm swing trading, and it's not that it means anything, it just gives me some context of what's going on.
Yeah.
You know, it's not truly affecting my decision. I'm actually much more concerned with chart, the price, market cap's the one thing I am concerned with. You know, the way the moving averages are aligned, volume, those kind of things are more what I'm checking real quick.
Yeah. Did you see?
A good example to go over.
Did you see TGen? TGEN had a big move on Friday.
Yeah, the only thing is these ones are tough for me. You know, I get a lot of these.
Yeah.
You know.
But interestingly enough, it touched the 200-day and then just reversed, you know. But it was news driven, though.
This is the 50-day for me. Is that what you mean?
Oh, sorry, the 50. Sorry.
Yeah, that's all.
Yeah. Yeah.
But yeah, no, a good example of two where institutions have their buy, you know.
Yeah.
And this is a smaller market cap.
Yeah, that's a small. I can check the news. There's a public offering, 5 a share to raise 17 million. So they're gonna get some cash then.
Yeah, and that's what you got to watch out for public offerings. Those
Yeah.
those really screw stocks. They, stuff's down 30% a day because of that.
We sent each other some examples of that throughout the week, right?
Yeah. That and all these scam Chinese companies. There are so many scam Chinese company charts. It's ridiculous.
Did you see that one? I don't even remember the ticker now.
Yeah, we should have a hall of shame for that.
Yeah, they all look the same.
They do.
It's ridiculous.
Yeah, they all trickle up, and then just someone sells like 90% of the shares.
Let me try to find the ticker. PCLA.
Yeah,
there
especially
you go.
these IPOs. But yeah, it trickles up, and then just someone just drops everything they have, and who knows who this is. But I mean, even if one person was like this amount of the move, then everybody else is just out. So it's
and pull up OST just for comparison, how similar they are.
Oust is another one. Yes, this is worth 12 cents right now.
Yeah, we have seen so many of these lately, so it's ridiculous.
Yeah.
Value saying, I gotta go. We'll catch up in the Discord later this week and let you know what I'm seeing. Nice, Value. Enjoy the rest of your weekend.
Yeah, have a good weekend. Have a good week, man. All right. Anything else that we wanted to cover?
I don't really remember. I did take iron, but it's a bit tricky, that chart there, I think.
Yeah, I'm just saving some of these so I can close out of this, because I think at this point I'm pretty much done with these. Yeah, what'd you get in here on Thursday?
I got in on Thursday, yeah. So I'm up on it, but just small.
Yeah, and I mean this is one where there was a bit of a pullback, so it was tough. You don't want to be, like I said, too tight with your stop loss, but plenty of room to run on this, and it just came from a huge run up.
Yeah, it was a bit
pretty gargantuan run up.
Yeah, it was a bit extended, I guess. So maybe I should, like, from the 50-day. I've been starting to look at that as well.
Right, I remember you saying.
Yeah, but the volume coming in, it just looks amazing. But maybe the smarter move here, because it's not in, as far as I can see, it's not in like a stage 2 yet, like Minervini is talking about, right? So the ultimate thing here is, if it moves sideways for a longer period and you see very little selling, it sets up again, and maybe then you want to take it on the next breakout, which is kind of what I thought it was going to do. But I see actually now in my account that I actually got stopped on this on that bounce down there. So I'm not in it anymore. I didn't see that for now. Yeah, I did get stopped on it.
Yeah, I was gonna say, and these ones are tough just because, this is a lot of buying pressure. We're talking 30 million shares like a day. And then there's obviously a lot of selling starting to go on here. People are starting to get out of positions. But it could, I mean, it's still holding, it's still rising. That's one thing I try and check, especially in these tighter consolidations. Like, and when I say tight, I just mean it hasn't gone on for very long. Not like tight candles. But yeah, other than that.
What do you think of a consolidation where you have these pretty volatile, like up and down moves, like a little bit here in iron, right? Does that bother you for when you look at a breakout later?
Yeah, I mean, it's not obviously, like, it just becomes tougher, but yeah, this is okay with me. Like this consolidation, like if you had gotten in early enough on this day, like I don't think this was a bad play. I just think it just didn't work out for you.
Yeah.
When I see a chart over here that's doing this so much, like this, I can't read. This to me is
No.
just there's so much noise here, and it's so up and down that like your chance of getting knocked out is just way too high. I'm not looking at these. I'm not looking at this period.
Yeah.
You know, even over here, I mean, I know you could say it broke out right there. This is tough. I mean, even up in here, it's still tough. It's a choppy chart. It's not.
Yeah. It was.
This is maybe the clearest I've seen is like maybe this day when it breaks out here, but these 2 days you could have got involved and gotten stopped out just because it kind of looks like it's breaking out in either of these days too. So it's just not as easy as it sounds.
No. But yeah, I'm going to keep it on the watch list and look for another setup maybe. But if also you look at the history after those massive periods off, it drops pretty heavily too.
Right. So
that can happen as well.
yeah. So kind of is what it is, but
yeah,
we'll see from here where it goes. And once again, this is also, like I said, this run up period. It's also timed with when the indexes were running up. So it's just one of those things to think about that, like,
yeah,
you know, breakouts during when the markets are running is super important. We've talked about this a ton with like, you know, Pradeep and all these guys in terms of, and that's why I built the whole market strength indicator type thing. Cause it's, you know, you can see it in the chart too, but it helps to have the numbers in my mind. But when this does run up, you know, if you're doing trading in this period here, your chances of catching names are so much higher than anything. Even the sideways move here, this was actually an okay time. But then as soon as the markets are really pulling back like this, you can't swing trade in this. Like,
no,
you just
which we learned. We
don't
learned that this year, right?
don't even try. I mean, you're gonna get just murdered during these periods.
It's very important. I think don't even try because it just. Okay, maybe you catch 1 or 2 or 3, but that's not enough for the amount of losses you're gonna accumulate in that period.
The odds are so stacked against you.
Yeah, and that's where we were thinking very quickly because we come from that background. But okay, switch over to deep value then.
Yeah, and that's where I start digging.
Yeah.
So it's kind of I guess the way we hedge ourselves.
I took a position, this is a few days ago now, actually, in SMCI, a bit of a larger company, but it allowed me it was yesterday, actually, on Friday, to sell out for a 10% gain on it. But I only sold half position and put the stop loss to break even. So it's at least profitable, but it did go down a little bit. So, but I think this can continue a little bit, I hope, but I took some risk off there.
Yeah, no, I think that's what you do. And I mean, this chart actually looks pretty good in terms of if this can hold above that 10-day moving average, which it has now for the month of July, and part of the end of June here. You can hopefully capture some of this move.
Yeah, and even if this has 30 billion in market cap, the ADR is 4.5%, so it can move, you know.
Yeah, what was I just was thinking of something. What was the chart that we just were looking at that, TIGR.
Yeah.
I just wanted to look at the parabolic move here. Just give myself a sell rule when I'm looking at these.
Yeah.
Just trying to, I'm always trying to find things and like, you know, if you run into this, what would you do? Like, I like to have a plan beforehand. I don't want to go into something and spitball ideas. So next time I'm in something parabolic, I'll think of it like that.
But I think the way we handled USEG in January was a pretty good strategy, like just to trail up the stop loss. And we took a little bit off, both of us, before, you know, halfway through that move or something. But then we just raised the stop, right?
Yeah. And yeah, USEG is one of those ones too that like...
It doesn't show so good on the chart because it didn't finish up there, but it actually went to 640, right?
Yeah. Oh, it tapped 640. I mean, it went high.
Yeah. I think I sold at 5, if I remember correctly.
You know, we were just talking about fractals, and now I keep looking at these, and I'm like, oh my god, like these charts are just identical. Like, look at this section here, and then look at this section here. It's just crazy how almost exactly the same it looks.
like I told you earlier, like David Ryan spoke about this in one of the videos I've seen him do, and after he said it, I've been looking as well, and patterns they do repeat, and that's kind of what Kulamagi and everyone is saying. Like this is we don't really know why this happens. We know we understand that it's like the psychology and big institutions and all that stuff, but historically you can find this again and again and again. And in smaller scales, bigger scales, and you can see it in the volume bars as well.
Right.
And also on the tinier time frames.
Right.
It's just it's just very interesting.
Yeah, it is. Hey, I do think I gotta end it here. Just because gotta get going. But
that's fine. I think we covered a lot then.
That you wanted to finish up with, or?
No, I'm good. I just hope you know, like you said, when you are in a position that goes up and you don't really have to do anything other than to track if you break some of the rules you have for it, it's just such a good place to be in a position, because you can just continue to raise that stop loss, and you know, you just take the profits when it dips down there, and you move on. So I hope that for this next week that we can continue with the stocks that we are in, that they're going to continue to go up there. And it takes also off a little bit of the stress by having to scan for things and take the, you know, the trade and time it, and you have to be present at the computer and all that stuff. So it's just good when you are in a phase like that.
Yeah, I think it's twofold to what you said. It's it takes the guesswork out by me kind of having rules in place. You know, as long as the rules are set so they kind of are in your favor in terms of profitability, I don't have to do a lot of guesswork. You know, my goal isn't to be guessing on these things. It's to just, when I see it, you take advantage of it, and then you follow the rules. And
then, it becomes very mechanical, which is a good thing in this environment.
It's just emotional, and you know, it's money, and it's, you know, it's one of those things that, like, in the moment you can quickly try and think you're going to make a good decision, you make the wrong one. So it's just a mix of that kind of thing. And then yeah, like I said, when you're in these positions for longer and you're not trying to take a ton, it's a lot easier to just focus on just a few names, because only so many tickers pop up. There's only so many names and so many positions I can even take in a given day. So, like, going into the market knowing I can only take 2 positions, it makes it very clear and cut what I'm trying to do that today. I'm just looking for 2 very, you know, clear breakouts in my mind, and just, you know, throwing them in there, seeing what happens. And the more you do it, the more honed I'm becoming. I'm starting to realize when I don't have the ability to buy, you know, 5 positions in a day, I only can pick 1 or 2. So I'm being very, you know, critical of, like, okay, if there's 3 or 4 things I can take, I only can take 1. So which one looks best, and what are the things that you focus on, and you know, which ones work out. And when you do pick one that doesn't work out, what did it look like that, you know, didn't, or that, you know, that you can kind of, like, just find any kind of nuance to it that means it didn't work out. And then the ones that do work out, what did they look like, and what did you miss, and what was better about those other ones? And you start to make, like, a list of criteria of what is going to work and which ones most likely won't, and it starts to up that batting average.
I have done a little bit of a change to what I put on the watch list, because sometimes I put stuff that kind of breaks the rules a bit, and in terms of them having a lower ADR and stuff like that. And I've been thinking, like, why do I put them on the watch list? I want some big moves, you know, in the account. So I've just started to cut out the stuff that I don't like anymore on the watch list. Even if it has a good setup and the chart looks very interesting, it's just not going to do enough for me, you know. So I'm, as you said, like, if you only have your eyes on 2 tickers for that day, or if your mindset is I'm only going to find 1 or 2, that's it. It will ease off some of the work, I think, and also the opportunities to make decisions that are wrong and get into wrong tickers, and having to, maybe you see two tickers that you like equally, and you choose the wrong one, you know, in hindsight. If you had narrowed down your watch list or the focus before that, and you would only maybe find one in that day because it fit the criteria on that day, and the other one was just on a list from earlier week or something.
Right.
So just to keep yourself updated on, I know we do also scans in the when the day is going, right? So you find new stuff, but I also have prepared the night before some watch lists of something that I look if it starts to break out and stuff like that, you know. So I'm trying to narrow down everything as much as I can and just keep it simple.
Right.
So
yeah, and then and like I said, the one thing that's kind of giving me good hope is, even though, like I said, the goal's 50% a year. I mean, I think the S&P is only up like 7%. So in a year where there's been a big chunk of it was a down section, and then the rest of the year's been pretty good so far. You know, you think about one of those years that's just a really strong year, like that, you know, bounce back from COVID and stuff like that. And if I can capitalize in those time periods, I can make serious returns in a very short amount of time.
yeah.
And then in those down periods, you just take all that risk off because you're just not even doing anything. You're just sitting in cash.
You can't, that's just something that's the biggest lesson for me so far this year. Just don't do any trading in that period. Like just track things,
Yeah.
but step away. Don't fall for the temptation to do anything. Even move away from the computer for sometimes if you feel like to rest your head and do something completely else, you know. Your time is valuable, so in those periods sometimes it's not even worth maybe tracking things, because you can track things the next day anyways, and you haven't missed out on anything if you're not going to do any trades anyway. So I think for me that's the biggest lesson. I will say though, if you start to short things, you would still have to be present in those periods, which maybe is the end goal for us, to play both sides here, right?
Yeah. Yeah,
So, but I'm not
you know,
there yet.
I'm not there yet, but yes, shorting during those periods would become obviously an option.
Yeah.
And then the only other thing, just kind of what like you were touching on too. So like I said that, for instance, with like the Nasdaq, for instance, like sure, in this period you can obviously see on the chart that this isn't a great period for things. But when I have my market strength indicator and I actually have the numbers, that's a big thing that matters, because you know, when I can statistically look at that there's only 3 breakouts that work during the day, and there's, you know, 10 things that failed, just in my mind, it's like, why would you do that? Why would you go into a market where you have like a 75% chance that you're going to just fail right off the rip going into something?
And it maybe it sounds easy, but when you are there and you watch things, it's so tempting to like, no, I'm gonna show everyone that I can do this in a bad environment, and the setup looks good, and no, I got this, you know.
Yeah,
Those thoughts are coming in, but then it's just to keep, like you said, put a poster on the wall, and with something like, don't be stupid, or don't be an idiot, and just remind yourself that okay, slow down, you know.
Right. So yeah, it's just a mix of all these things, and like I said, I think it's coming together for me. You know, this has been a great month. It's just been a good month in the markets. So I do appreciate the fact that it's not that I'm doing anything special. It's the right time to be doing this strategy, and that's what matters.
Yeah.
You know, and once your rules are pretty set and you have this, you have a profitable strategy, you just have to wait until the markets are in your favor, and then you can do everything. And then and now it's just we just got to give it time. You know, at these numbers I'm hitting right now, I could be going to part-time in a few years, which would be awesome.
Yeah.
And then I could focus on this during the days, you know, and you know, be here and present for the market. I know you in Europe have a little bit different because you're on, it's kind of the backside of the day for you. But
yeah, which is a very big advantage for me, but at the same time it's with everything else in your life, you know, it's not always as easy as that sounds like. It's a luxury a bit, you know, because
No, that time's the busiest time of the day for me when I'm getting home.
yeah, and you know, it's like with the family and everything. Like you need to make the dinner, you need
Yeah.
to get kids up from school and kindergarten and stuff like that. It's like
It's a blessing
it
and a
sounds
curse.
it sounds good, but I'm very busy in those time. But I would never be even able to do this if I had to do this while I'm at work, because I work at a place where that's not a possibility for me. So I'm very happy that I live here, that I can do the trading after my actual work, you know. So I wouldn't have it any other way right now. So, but
Yeah,
it's still,
I guess you just learn and make it work for you. Is really
yeah,
what I'm
you
getting
have
at.
to, and but everyone is busy, right?
Yeah. All right.
Yeah,
I gotta get going. We'll end it there. Everybody have a good rest of your week and weekend.
yeah.
Johnny,
Enjoy.
we'll be in touch. Check on the Discord. I keep posting market strength on there. I'll do it all next week.
Yeah, I look at it. I stopped doing my score sheets because I did the groups in TradingView, which function the same way. But I always look at your market strength. So for me, it's something I look at as well. So I hope people find that valuable in the Discord.
Yeah, I find it useful every day. It just kind of gives me, because sometimes too, like the market will be down, let's say like 0.5% or something like that, and to me in my mind, I'm like, wow, it was a really rough day. Then I put the numbers into my market strength, and like it still comes out pretty good. And I'm like, all right, so it's not that bad of a day as I thought. You know what I mean?
Yeah,
Like
yeah,
stuff's still working. And that's the thing is like when I start to see breakouts stop working, I'll pull back. You know, I will slow
yeah,
right down.
yeah,
So it's just a good way to keep a gauge on things and see how things are moving. And you know,
yeah,
obviously with all this too, you got to learn it yourself. I mean, I feel like you and I have probably given like a million valuable tips that I would have loved when I first started, but
yeah.
it also probably wouldn't have meant as much to me.
No,
You know?
we talked about that off the camera a little bit ago, right? With the building the sheets and all that stuff as well. Like
Yeah.
now I feel like it would be easier, at least for me and my process, to use you know, chat GPT and different AI tools. But then at the same time, I'm very thankful for going through that learning experience, and I think it made me understand things better than if I just get a formula from chat GPT. So it's been good. I've enjoyed everything.
Yeah.
Yeah.
I think I still would have wished ChatGPT was there when I built them, but
Yeah,
but either way,
yeah.
just because there's
Don't
some
get me
painful
wrong.
learning experiences that would have been easier. But either way,
I don't
um,
think it would figure out the calculator still.
yeah, I mean, I still would have had to do a lot of my own work. So I
Yeah,
think that's the big difference is you still have to
yeah,
put in a ton of your own work.
yeah,
It's just like having a helper there essentially. It's another person to
yeah,
bounce ideas off of is how I look at it.
yeah, for sure.
But all
All
right,
right.
everybody,
Yeah.
we'll
Yeah.
see everybody next week.
Nice. Bye bye.
Peace.